The stock of BSE recovers from yesterday's slump, trades higher by around 3% as market regulator SEBI clarifies that no proposal to link option leverage limits to cash positions is currently under consideration.
Jefferies upgrades Varun Beverages to a buy rating and hikes its target price to 650 rupees, expecting a recovery in demand and margin going ahead.
JP Morgan initiates coverage on electronics manufacturers with an overweight rating on Keynes Tech with a target of 7,150, expecting a revenue CAGR of 46% till FY28.
Union Bank slumps following a weak first quarter business update, reflecting its weakest loan growth in the last 4 quarters. The stock now down by 5%.
B2B education platform Kryzac makes a steady debut on Dalal Street, listing with gains of about 14% to its issue price. The management will join in shortly to discuss their post-listing strategy.
Good morning. You're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me today is Ekta Batra. No change for the frontline index. The Nifty absolutely flat, as is the Sensex. The broader market's doing a lot better, though. We have a lot of stocks advancing, 1,500 stocks in the green for about 1,000 stocks in the red. Has your portfolio feel a lot better today? And the nature of stocks which are doing well belong to the consumer staple space and some of the consumer discretionary names as well. The last 1 hour or so has belonged to the stock of Whirlpool, which has moved to the high point of this morning as we speak. Hi, Ekta.
Hi, Mangalam. Well, yes, absolutely. We have also a couple of the frontline stocks which are doing better today. So Asian Paints is up around 1.6% at this point in time. HUL is seeing a good week. So HUL is up around 1.3%. At current reckoning, it's gained around 3.6% on a week-to-date basis. So good going for a couple of these FMCG counters. On the downside, HCL Tech, LTI, Mindtree, all of these stocks are a bit under pressure. So it seems as though that's going to be, one of the key things to watch out for, considering that we do have TCS, which will be releasing numbers at the end of this week. Yep. But nonetheless, this is what's taking place for the markets right now. The mid-cap index just about consolidating, but yes, a little bit of green that you can see.
Interesting data that is coming in at the bottom of your screen as well, especially at a time where the market has been consolidating and is, looking to kind of move on from the global uncertainty that we're seeing. The data that has come in for the month of June from the mutual fund corner, the AMFI that is, overall assets under management at around 74 lakh crores. Large cap inflow has increased month on month. And we have some more data as well. Mid-cap inflow also has increased by about 30%, 2,800 crores going all the way up to 3,700 crores. And we have net equity inflow, which too has seen an increase, perhaps on account of the large cap and the mid-cap flows increasing, month on month. So total AUM doing well. Large cap seeing an increase, as have mid cap. So maybe the street continues its bullishness on the market, the investors. The one number that we'll be watching out for likely in the next 20 minutes or so, a little after that, would be the SIP number. Over the last few months, it has been hovering between 25 and 26,000 crore rupees every month. The last month was, again, at the higher end of that range, among the highest that we've seen. So we'll watch out for the SIP data that comes in as well. But for now, the fact that there has been an increase in the month of June after a decrease that we saw between April and May should make things a lot better. And also between April and May, there was a lot of global and local uncertainty. We had the Operation Sindoor, we had, all those things take place, the tariff-related issues, and then a bunch of wars globally as well. So that led to a bit of, the kind of inflows coming down month on month. But now, with the market having moved on from those issues as well, looks like the funds are just following that.
Yes, so just to sum it up, the net equity inflow is up 24% on a month-on-month basis. We have the small cap funds which have seen an increase of around 25% this time round. So that's also seeing quite an uptick. Large cap inflows, 1,694 crores. It's up around over 35%. And even the mid caps have seen a good amount coming in at around 3754 crores. So overall, seems as though the momentum continues in terms of inflows. And yes, the SIP figure is something that we'll be waiting by for. It will be out probably in the next 30 odd minutes. Let's shift focus to our special segment where we will get you a few ideas for profit from Money Control Pro. Bharat Ginani of moneycontrol.com now joins in to talk about the stock that he's tracking very closely. Bharat, over to you.
Today's ideas of the Thangavan Jewelry Limited. Despite a sharp increase in the gold prices, the jewelry companies posted strong performance in Q1 FY26. The listed jewelry companies posted growth in the range of 18 to 30% in the quarter gone by. We expect Thangamal Jewelry to have witnessed strong growth in Q1 FY26 as well. Strong festive sales led to the healthy growth momentum for jewelry players. Another noticeable trend was consumer shift towards lightweight and low-carat jewelry. Thangamal Jewelry continues to rapidly expand its store network and aims to open 10 new stores in the current fiscal. The recent fundraise of about 510 crore would enable the company to undertake rapid store expansion. The company is tapping new urban areas as well as deepening presence in the rural areas. The company wants to increase its strong customer base. The margins which were under pressure last fiscal are expected to normalize in FY26. We expect the company's EBITDA margins to revert back to its historical range of 5.5 to 6% in the current fiscal. Thangamal Jewelry is amongst the few quality listed players in the jewelry space. At the current market price, the stock is trading at a PE of 26 times FY27 projected earnings. Investors with a long-term view can add the stock report.
All right, new fund inflow coming in lower this time around versus the last month, perhaps on account of lower new fund offers itself. And we've seen some outflow from the liquidity funds as well, telling you that maybe more money is moving into equity versus liquidity funds for fixed income. Just keep an eye out on a couple of these stocks. Bajaj Finance from the broader markets has moved higher. In fact, from the frontline end, we have Bajaj Finance, which has moved to the high point of trade. Bajaj Finserv is spiking as well, and as is Axis Bank. Axis Bank has moved to the high point at this morning. Let's move on. Let's get you some insights coming in from the policy makers, business leaders and economists shaping the world and India's future. This is CNBC-TV18 Prime that we're talking about, which decodes global shifts and their impact on Indian businesses, gives you unparalleled insights as well. You can tune into CNBC-TV18 Prime at 12 noon for the Global Reset, 1 p.m. for the Big C, and Global Lens at 8:30 p.m. on weekdays and weeknights. Welcome back. Let's get a technical perspective on the market, even as we are consolidating in a very, very narrow range. Chandan Taparia of Motilal Oswal Financial Services joins in. Chandan, absolutely flat for the frontline index, trading in an average range of 180, 190 points over the last 1 month itself. Where does the frontline index go, according to you, after such a narrowly traded band? And individual stocks, what are you bullish or not so bullish on?
Mangalam, thanks for having me. So the market has been consolidating the range, but the good part is that declines are being bought. The reason behind the narrow trading band is the VIX, which is quoting below 12 marks, which is at the multiple months low. So lower VIX clearly indicates that market will be narrow range, but overall undertone of the index is positive. So that's why we will continue to be with buy on decline stance. As of now, till Nifty holds about 25,200, we are expecting bullish stance to continue towards 26,000 marks. But for intraday point of view, one can keep the support near 25,400. So for swing as well as positional point of view, we are expecting index to head towards 25,650 to 26,000 marks. Looking at the Bank Nifty index, here we have seen buying interest and declines are being bought. However, the consolidation is clearly visible. Until it holds above 56,750, we are expecting Bank Nifty to head towards 57,750 to 58,000 marks. So positive view on both the indices. However, because of the lower VIX, momentum could be slow, but undertone could remain bullish in the market as of now. Now, talking about individual stocks, first it is buy on ICICI Pru. We have seen a formation of a cup and handle pattern, which is a bullish implication as per the technical setup. So we have seen momentum in the counter. In fact, the longs are being added. So expecting a positive stance in the counter, one can buy with support of 669 for an upside target towards 705 level. Second trading idea, that is buy on Cummins. Strong breakout has seen just 2 days back, and after that follow-up buying is clearly visible. Rollovers were better and stock is in momentum as delivery volume is also visible in the counter with some long additions. So one can buy Cummins with support of 3450 for an upside target towards 3650. One more trading idea, that is from mid-cap basket, that is buy on ITC Hotel. Selective hotels counters are doing well, and ITC has been making high top, high bottom with a fresh breakout on the daily and the weekly chart. We have seen surge in the trading volume, which also increased the positive stance in the counter. So with support of 222, we are expecting a rally towards 238 in the ITC Hotel.
Okay, all right. Thanks very much, Chandan, for joining in and taking us through all of those calls on the technicals. Let's now get in Sandeep Bagla, who is the CEO at Trust Mutual Fund. He's joining in to discuss more about the data that has just come in. Sandeep, hi, welcome to the show. Well, it seems as though the equity markets are not having a problem. They've discarded all of the uncertainty at this point in time. The net equity inflows are up over close to around 25% on a year, 25% for this month gone by. Tell us more. Do you expect this kind of momentum to continue?
Yeah, I think, good morning. So I think that the flows are quite robust. And of course, flows are influenced by a number of factors. The immediate past performance of the equity market is a bit of an influencer. The liquidity conditions are also have some minor role to play in the short term. I think the number of NFOs which are hitting the market, they tend to galvanize the distributor community and mobilize large amount of money. As we talk now, I could see that there are at least 15 NFOs which are approaching the market in pretty soon, including our own fund, Trust MF Multi-Cap Fund. So I think this month is going to be very, very good in terms of retail mobilizations. I think the money is coming steadily through SIPs. The SIP number I can see has increased from 26.6 thousand crores last month, the previous month, to 27.2 thousand crores. So, the SIP flows are very robust, and the NFOs will help mobilize more funds into the equity markets this month.
All right. And what is your sense on how the SIPs will be this year? We don't have the number so far. It's 26,000 crores, 26,000 crores has been what the norm was over the last few months. But what was also interesting was the trend of SIP accounts closing. What is your sense of that number in this month, in the previous month?
The SIP gross inflows are coming in at 27.2 thousand crores, 27,000 crores odd. I think that is the number we need to focus on, because that number is going to come month after month going forward for the years to come, and is only going to increase. If somebody had started their SIP 10 years back and that's closing, that I think has no relevance. I think this is the number that we need to track. And I think this number will only increase because more and more investors are now realizing that they can meet their financial goals better by participating in the India growth story through the mutual fund route, which is simpler, clearer, consistently they can do that. And I think that this number will keep on growing. At the ground level, there are thousands of distributors who are working closely with investors, making sure that they launch, they register for new SIPs, and the older SIPs also continue. So I think this is a phenomenal story in India, which is underplayed, that the SIP story, which will ensure that a large amount of retail money is coming into the Indian markets consistently and for a very long period of time.
Okay. What's your sense in terms of the interest that we're seeing back in terms of mid caps as well as small caps this time round?
See, in fact, if you look at the next 2 years earning forecast, I was looking at the index levels. The mid-cap earnings are slated to grow by about 15%, small cap by 13% for the next 2 years, while large cap is expected to grow only in the smaller single digits. So mid-caps, if growth is considered, mid-caps are not as overvalued as one thinks. So I think that by experience and by performance, it is getting reinstated in the consumer's mind and the investor's mind also. And people are investing in mid caps and small caps. And I think if the growth materializes, then these stocks will start looking cheap again. If not cheap, more reasonably valued.
All right. Thanks a lot, Sandeep, for joining in and giving us the initial thoughts on how this has been. What we'll do is we'll, get some more data and then pull in, some other experts along with you to discuss this in further detail for now. So looks like the mutual fund industry and the equity market, the cult or the discipline of Indian equity investors continues to stay, as we've seen in the month of June as well. With that, we'll slip into a short break. And as we do that, let's give you some good news. India's business news leader is now just a click away, which is the CNBC-TV18 app, which gives you instant access to breaking news, in-depth articles, and all the financial world updates coming in at your fingertips. You can download the CNBC-TV18 app from either the Apple Store or the Google Play Store, or just scan the QR code, which is up for you on the screen.
Welcome back. Well, just watch out for a couple of these stocks from the broader markets, which are showing good amount of traction. Garden Reach Shipbuilders is up 4.5%. Good amount of volumes traded on that one. We have Keynes Technology, which is up around 2.6%, and a couple of others such as GSK Pharma, which is showing a little bit of traction in terms of at least pricing, if not volume. So that stock is up around 1.7 at this point. Edelweiss Financial too has had a decent week. It's up around 1.6% at current reckoning, is up around 1% at this point in time. So overall, for the market, still very quiet. The advanced decline ratio just about holding in positive terrain. But let's get to an exclusive interaction then. CNBC TV18 Shireen Bhan caught up with Chuck Robbins, the chair and CEO, and Jeetu Patel, the president and chief product officer at Cisco, and asked them about a whole host of issues, including the impact of Trump's tariffs, the opportunities it sees in India, and the AI revolution in the country. Listen in.
Well, this is the issue in the business community right now is the uncertainty just freezes everyone. Because if and when we get to the end game, then we can adapt appropriately. And so if you look at the tariffs that were put in 2018, I think it was, we knew what they were put in, and we were able to kind of flex our dynamic supply chain in order to adapt to those things. And we'll do the same to the extent we can once we see what the end game looks like. But right now, it's a little more complicated, looking at a multi-quarter P&L for the business because you just don't know which tariffs you have to consider. So what we've effectively decided to do is we're just going to look at our numbers based on what's in effect today. And then, I mean, we can do all sorts of speculating and scenario planning, but tomorrow they could be useless. Well, for us, it's not meaningful yet because a lot of the products that we sell are under the 232 investigation that is happening now, the national security view on some of the technology stuff. So as of now, we don't have meaningful impact, which again is the reason we're anxious to get to the end so we know exactly what we're dealing with. India is one of the top 3 countries around the world from our perspective. If you look at the next 5 to 10 years from a growth perspective and an opportunity perspective. G2 and I came here together, September I think was the last time, and we left with this unbelievable view that we needed to begin to invest even more heavily here. And we were very pleased, I was very pleased at least, and that we had already made the decision to deploy the manufacturing platform. We've had a couple of false starts on manufacturing over the years. This time we did it right. We went full node, we turned it into an export hub. We had a plan for multiple products. We're now doing PCB assembly. So we've got that rolling, which is a good baseline. We've got our R&D and Innovation Center in Bangalore, which is really good. G2 and I are pressing our team in a massive way here that we should be able to triple the size of the business here in a much more compressed window than our team believes. My team's listening to this interview right now, so we want to make sure. And that's going to require us to invest. It's going to require us to invest our time and our team's time. G2's coming here with his entire product leadership team in January. They're going to do an offsite here. We're going to host a big event here that's going to focus on cybersecurity, AI. And so we have to invest here to enable our teams to actually achieve what we see as being possible. And that's what we're going to focus on.
There's such a huge advantage that India has right now because of the demographics, the young workforce. I think we are kind of in this mode of just getting into this AI wave, the second phase of the AI wave. You're moving from, chatbots intelligently answering questions for us to agents that are going to conduct, automate workflows and conduct tasks and jobs autonomously. And so what I think we have is this unique opportunity in India where there's going to be an exponential rise in throughput per capita. And that'll require India to make sure that, they've got the right infrastructure build out. And just like you folks had the huge infrastructure build out during mobile, and you were very successful, I think there's going to be data center capacity build out that's going to be a huge opportunity for India. And I think there's hopefully a lot of opportunity for Cisco to participate in that and helping India.
Right, and you can catch excerpts of this interview all day today on CNBC TV 18. With that, we're out of time on this edition of Chartbusters. You stay tuned. Trading Hour comes in.